really what we're looking at is the demise of the paper system. Because people are beginning to understand why you should hold gold. And as I say, China has basically cornered the market. Call it the physical market. They've cornered that in effect. So where does that leave paper? Well, I mean, paper's just a bunch of promises with nothing to back it. It's not gold. It's credit. And, it's credit which, so long as the counterparties are solid, then you could say that the paper is a gold substitute. But when we see the fiat currency system coming under huge pressure and looking at the end of the whole fiat currency system, then all these paper promises are going to turn out to be worthless. And I was talking about the World Gold Council. I was slightly amused. I mean, I think they've rather lost the plot. Either that or I've lost the plot. It's quite possible. I'd question whether you're even going to get the liquidity over there. I mean, basically, the history, if you like, I mean, the more recent history, following our very successful gold standard, back in the 19th century, the history of the 20th century is that central banks grab the gold and they won't part with it at all. The idea that they're actually going to go on a gold standard and, say to all comers, we'll exchange our currency at a rate which is as follows. And, if you're not happy with our paper, then come and exchange it. I think we're an awful long way from returning to those days. You're not going to get liquidity being released from the market. I think that's the key thing. And the reason I mention household savings is that, these guys are just as human as you and me. They see something going up and they chase it. They're not going to say, "Oh, thank God, I could make a bit of a profit here." Unlike some of our Western investors,
yeah,
take a rather different view. Just let the figures sink in for a moment. You're talking about 30% household savings rate. You are talking about $5 trillion a year seeking an investment.
Mm-hmm.
How do you accommodate that? I mean, the Chinese economy has been growing pretty well. I don't buy into government analysis of these things and macroeconomics. It's a load of rubbish. It gives you no.
They moved the fence back to 35 for silver, and recently they moved it to 40, and we've broken 40, so I think they moved the fence to 45.
I think you're right.
Okay, so my point is that if you follow my forecast from several months ago, I was saying that by September and October we'd be pushing 50, and we're not. We're not.
Yeah.
Because we didn't break the fence, jump the fence, and find open country.
No, it's open. Yeah.
We found a fence that had been moved back $5.
Yeah. Yeah.
So
we jumped the fence, but there was no open country.
By Christmas, we'll be fighting 45.
Yeah.
By March, we'll be fighting 50. This is not going to get out of control. We're not going to see my Fibonacci sequence. 10, 20, 30, 50, 80, 130. We're not going to see that. Not for a while. But there are a lot of factors that are in favor of silver. The demand is just going up, 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 up. It's solar, it's military, and I believe the military, U.S. military, is in collusion with Wall Street to assure that we don't lose control of the silver price. The military is keeping the silver price down. They need it, I believe they're building a stockpile, and they're competing with China for that stockpile. Okay, at the same time, supply is going down. We've got a widening industrial deficit.
Yeah.
Solar and military, and it's also just basic electronic. A lot of demand. And, this supply, not enough attention is being given to Mexico. And I'm very bothered by some of the analysts out there. They're talking a lot about the demand. And they make a good point that we're not seeing any major silver mine discoveries.
Yeah.
But they're not talking about Mexico. Mexico is practically blocking exports of silver.
Okay, didn't they shut down their mines in Mexico? Or is it really about the blocking of the exports, or both?
I think what they're doing is they're limiting the mining inside the country, and they're severely limiting foreign direct investment, which has resulted in partial shutdowns of some of the mines.
Mm-hmm.
I mean, if a big company has 6 mines, they might shut down 2. They're not shutting down all of them. They're shutting down a couple. It's because of Canada used to be the biggest foreign direct investor into Mexico, and they're down over 60%. It's many billions. Okay, but Mexico had become a communist nation without the name, without the label. And they're permitting, this is not new. They've been doing it for a year. They're permitting exports of silver concentrate and gold concentrate to China.
China, yeah.
And so's Ecuador, and so's Chile.
Yeah.
Well, and this is not good. This means that the Latino silver production is basically hoarded or directed and funneled to China. It means that we're going to see a real supply shock in New York for silver. Okay. What they're doing, this is really complex, and I can't make this really simple in a short period, but they're trying to squelch demand by telling the public that there's no supply. Well, if there's no supply, we should be rocketing in price.
Yeah.
The public is not catching on very well that the lower supply should be going hand in hand with fast rising price, and it's not. It's not. Because I think the military is hoarding the supply in the United States.
Tonight, we turn to a seismic shift in the global financial system. Veteran economist Alasdair MacLeod is sounding the alarm, not about a market correction, not about short-term volatility, but about the collapse of the paper-based monetary order itself. As MacLeod puts it bluntly, what we are witnessing is the demise of the paper system, and at the center of that collapse stands one country, China, which he says has effectively cornered the world's physical gold market.
I'm sure that some of that would be, in capital investment, it's bound to be. I mean, because the economy works there, it works pretty well. I mean, much as our analysts, macroeconomic analysts in the West hate it, they hate this proof that they're wrong. But what the Chinese are now doing, and this is fascinating, because having cornered the market, they're now saying to their friends, that's not us, by the way. I'm talking about the Shanghai Cooperation Organization and also BRICS. Saying to them, look, we're opening vaults, SGE vaults, Hong Kong, Saudi Arabia. I heard, I saw something yesterday, India. I can't substantiate that, but it wouldn't surprise me at all. And also throughout Southeast Asia, there will be exchange facilities whereby you can swap Chinese yuan for gold and vice versa. The only thing we don't have is the rate at which it might be fixed in the future. But you can see that they're setting up a network, if you like, for governmental settlements. This is not going to be available to citizens, I believe. I don't think so. I can't see it. But it will be available for governments settling their trade imbalances. And I think the point about it is that it will make the yuan attractive, if you like, as a foreign currency. The other thing is that they are setting up a process whereby if you're going to, let's say, sell South African rand to buy Indian rupees, at the moment you have to sell your rand to buy dollars, sell the dollars to buy rupees. They're cutting that out completely. This is going to release foreign exchange commitments, which, according to the Bank of International Settlements, they reckon is around about $80 trillion. We're talking about the dollar's usage declining quite rapidly on these developments. So where does that leave the dollar? Well, it's the end of the fiat currency system. I mean, that's what we're seeing. All we don't know is the precise timing. But everything we see rather suggests it's going to happen sooner rather than later. So where does that leave gold? Well, wake up, folks. This is beginning to happen now. And I really can't see.
Hmm.
They're cutting back on the U.S. mint output, and that is against its charter. It is not legal, and Trump is not doing anything about that. He could say, ramp it up, buy silver at whatever price. Okay, Mexico is the problem. They're the largest producer on earth. They're like more than 3 times the production of Russia.
Yeah.
And Poland is equal to Russia in silver output. That was a shock to me.
I didn't know that.
Just a weird fact of the silver world.
Yeah.
If you combine all the Andean countries of Ecuador, Chile, Peru, and even Argentina, there's a large swath of I guess it's Western Argentina, and combine that with Mexico, they've got close to 60% of global silver output, and China is getting it.
And is that to do with the Belt and Road Initiative, how active it is in that part of the world?
I don't think so.
Uh-huh.
I think it's just Mexico has been the intermediary for those other Latino countries. Mm-hmm. Mexico is the problem, and the United States is now at war with Mexico. Mm-hmm. It's becoming wider recognized as being at war with Mexico.
With the Mexican cartels.
It's the cartel versus the Immigration Control Enforcement, ICE.
Yeah.
I think the C stands for.
Tonight, we spotlight a startling conversation from the Starseeds of Freedom podcast, where outspoken financial analyst Jim Willie joined Carrington McDuffie to reveal what he believes is the most urgent and underreported financial transformation of our lifetime. Whether you're holding silver, watching XRP, or just trying to understand what's really going on with the dollar, this report is your wake-up call. Let's begin. Part 1. The silver price is a lie, and it's coming undone according to Jim Willie. There's a silent war raging over silver, not in the headlines, but in the warehouses, the military contract.
They got a $74 million transaction.
This isn't just price suppression. It's a controlled market on the edge of implosion. Part 2. XRP, the bridge asset that Wall Street doesn't want you to own now. Let's talk about the asset that could outpace silver in raw returns and may already be embedded in the infrastructure of tomorrow's finance. XRP. Jim Willie doesn't mince words. He calls XRP the bridge currency of the future, destined to settle global transactions not just within the Ripple ecosystem, but across 60 to 80% of global institutional transfers. And here's the kicker. Wall Street knows it, and they're getting in under the radar. According to Willie, firms like BlackRock, Fidelity, and Templeton are all under non-disclosure agreements. They're buying Let's unpack what this means. In recent years, China has steadily transformed itself from the world's largest gold importer into the de facto custodian of global bullion. The People's Bank of China, together with the Shanghai Gold Exchange, has built a network of vaults, trading hubs, and bilateral gold settlement systems that now stretch across Asia and the Middle East, from Hong Kong to Saudi Arabia, and, reportedly, even India. This isn't a rumor or a theory. It's the quiet construction of a parallel monetary infrastructure, one that allows governments within the Shanghai Cooperation Organization and the BRICS Alliance to settle trade directly in gold or yuan, bypassing the US dollar entirely. This system, he explains, is designed for governments, not retail investors. Ordinary citizens may never be allowed to use it, he says. But for nations, it's the backbone of a new settlement network that eliminates the dollar from cross-border trade. Now consider what this means for global liquidity. The Bank for International Settlements estimates that around $80 trillion in foreign exchange transactions still rely on the US dollar as an intermediary. Once these new yuan gold settlement channels become active, that dollar usage could decline rapidly. It's the end of the fiat currency system, MacLeod warns, and it's happening sooner rather than later. He argues that this isn't just a shift in trade policy, it's the endgame of fiat money. Paper currencies, he says, are just promises with nothing to back them. They function only as long as confidence in their issuers remains intact. When that confidence goes, MacLeod continues, those promises become worthless. To understand how this transition is unfolding, we need to look at the numbers. Chinese households save over 30% of their income, generating more than $5 trillion annually in investable capital. Much of that money, according to MacLeod, is now chasing gold as an inflation-proof store of value. When that kind of money enters a finite physical market, he says, liquidity disappears almost instantly. And indeed, liquidity is evaporating. MacLeod notes that the futures market is now being used for direct delivery, something unheard of just a few years ago. In one recent trading session, a staggering 66 tons of gold and 1,500 tons of silver stood for delivery, roughly 58% of global annual silver mine output. These aren't speculators flipping contracts. These are institutions, sovereigns, and industrial players taking delivery because they can't source metal anywhere else. You have to buy a future just to get bullion, MacLeod says. That tells you the physical market has vanished. Meanwhile, Western institutions appear to be fighting a losing battle. The World Gold Council, he notes with amusement, recently promoted London as the center of global gold trading. But that so-called trading represents unallocated paper gold. Hundreds of tons of notional trades with only a few tons of actual metal settling physically. They're moving numbers around on screens, MacLeod says. In Shanghai, the gold moves in trucks. In one extraordinary example, the Shanghai Gold Exchange reportedly saw 53 tons of gold enter its warehouses in a single day, real physical metal. And once it enters, MacLeod says, it doesn't come out. That's the crucial difference, physical ownership versus paper claims. Western analysts, he adds, continue to underestimate what's happening. Bloomberg recently confirmed that China aims to become the custodian of foreign sovereign gold reserves, a statement that would have been dismissed as conspiracy years ago. Now it's openly stated policy, MacLeod says, and still, the West doesn't get it. He's equally critical of the World Gold Council's latest push to digitize gold trading, calling it a distraction. They're trying to make gold fit into the investment management model of Wall Street, he says. But the market has already moved on. The real trade is physical, sovereign, and east of Suez. The implications for the US dollar are enormous. As countries settle trade in gold and yuan rather than dollars, the dollar's global utility will erode. That's the real de-dollarization, MacLeod explains. It's not about dumping treasuries. It's about building an alternative system that no longer needs them. And what about the Federal Reserve and Western central banks? He believes they are trapped. The Fed's intervention in derivative markets through the Bank for International Settlements BIS, where tons of borrowed gold must be squared every month, shows the extent of their exposure. The numbers are staggering. Each monthly BIS squaring now occurs at gold prices roughly $400 higher than the last, with roughly 30 tons of borrowed gold still outstanding. At current prices, MacLeod estimates that's billions in losses. And there's only one player big enough to hold that short position, the Federal Reserve. At the same time, margin increases, a tool historically used to suppress gold rallies, are conspicuously absent. In the past, rising prices triggered sudden hikes in margin requirements, flushing out leveraged longs, but this time, the regulators have stayed silent. Why? MacLeod asks. Because the shorts can't afford it. A margin call now would bankrupt them. Meanwhile, the physical delivery trend continues to accelerate. Nearly 950 tons of gold have been delivered through futures markets this year, equivalent to an entire year of U.S. mine production. Silver deliveries have reached 11,500 tons, an astonishing figure that underscores how detached paper pricing has become from physical reality. The takeaway is clear. The West's paper gold system is disintegrating, and the East's physical market is taking over. China isn't just accumulating gold, it's rewriting the rules of the global monetary order. As MacLeod concludes, we're not talking about gold rising. We're talking about fiat dying. Every sign from central bank buying to the creation of gold-backed trade networks points to a future where real metal, not paper promises, defines value.